Hi guys, and welcome to the Weekly Watch. I'm your host for today, Eimear Daly. We have obviously some very key event risk going into next week with a number of key central bank decisions and obviously the all-important US CPI. I thought it was interesting at this point to kind of gauge market sentiment and what the market is feeling. I've been on the road for the past kind of 2 to 3 weeks seeing both real money, corporate and hedge fund clients kind of across the US and Europe. So I wanted to give you kind of a gauge of their sentiment and kind of their conviction levels going into this key event risk and obviously into next year. I would say kind of my number one takeaway from my meetings has actually been a lack of client pushback. So while I would really like to think this is a reflection of, those sound economic arguments and that they're buying up my trade ideas, actually, I think it's really a reflection of very low conviction levels and very low kind of strong trading ideas from clients. I think this is kind of a big shift in terms of kind of the global investment environment. And I think investors are really kind of grappling with how exactly to trade this and, how bullish they actually want to get. Saying this, I think it's very apparent that client conviction levels are quite low. And therefore, I think, my kind of key takeaway is that vol is the trade going into the end of next year. I'm particularly looking at break-evens, which are quite attractive relative implied vol on a number of G10 FX pairs that I think could represent kind of good ways to kind of position for the fact that conviction is low and that while investors may have positions on, any kind of outlier data print could really have their conviction tested and could cause big squeezes in some major markets. I would say that, probably some of the strongest conviction we had was actually to the bearish side, which I guess is in quite sharp contrast to some of the market moves, which have been quite risk positive over the last few weeks. When you kind of tested investors in what their kind of global outlook were, they really said that there was long-term stories out there, but they were subject to a lot of uncertainty, and it was hard to really find a clear growth driver for the year ahead. I think one of kind of the key big questions out there was China and the prospect of China reopening, and even though we've seen financial markets really jump on that China reopening story, kind of going into, emerging market assets. When you talk to investors, they were more hesitant about getting into this trade. They really kind of cited some of the risks that we've been saying to our clients in terms of, low vaccination levels in China. The fact that any kind of reopening was probably being met by waves of COVID outbreaks and therefore creating their own kind of limit on demand coming out of China, and obviously concerns over the initial push to reduce testing levels. Despite this, actually, investors were still ready to put risk positions on, and interestingly, it was in EM. I found that they were very tactical in where they're positioning risk. They wanted yield pickup. They wanted to be rewarded for taking risk outside US Treasuries. We had one or two clients noticing the long end of some EM yield curves were attractive, but it was very tactical. It was very much kind of determined by valuations. So I would say characterize this environment where investors kind of almost have to trade, have to put on risk, but they're being very tactical and very strategic in how they deploy this. Obviously, the other key kind of consideration out there was the Fed and the question of the Fed pivot. I would say that investors were very concerned that they would be kind of blown out of the water by any kind of outlier US CPI print. A number of them actually cited the June CPI print as having kind of upsetting their trade rationale, and they were very reluctant to be burned twice. Others kind of considered, whether this was just a question that inflation globally had to roll over, or whether this is a more fundamental rebalancing between global financial market assets and central banks globally. So I think they would be kind of my key takeaways as we head into a very pivotal week for financial markets, and definitely will be a determinant of the year ahead. That I would say conviction is low among our investor client base, and therefore I think vol is potentially underpriced. But yet clients do have to trade, and they are willing to put on risk positions where they're attractive, based on kind of a tactical yield offering and based on cheap valuations. Thanks a lot for listening to the Weekly Watch. If you've liked what you've heard, press subscribe or click like to get the latest episodes as soon as they're available. Have a great week.